Contrast that with, say, oil and gas limited partnerships. I have a general idea about what they are, and I have some vague sense of when they perform well, but that's about it. If someone tries to tell me how great these are, then I'll tell them I leave that one to the experts. I'll leave you with 2 tips I learned that have given new investors peace of mind. First, investing isn't a contest. Your goal isn't to beat your friends and coworkers. Remember, markets are pretty close to fully efficient, and in Lecture 14, we saw that trading is hazardous to your wealth. Just don't try to pick winners so that you keep your transactions costs down. Your savings will be substantial. That will pay for this course, and then some. Lots of people have trouble with this. We live in a competitive society. I know it can be hard to deal with people who tell you about the great stocks they picked. When this happens, remember that their memory isn't perfect, and they may not have done as well as they say they did. They're not likely to tell you about the losers they owned anyway, are they? Just politely congratulate people who say they made a fabulous investment, then smile and get a good night's sleep. Second, never worry about the one that got away. Most of you are too young to remember Gomez Addams of the old TV comedy, The Addams Family. The details of the specific scene have faded with time, but I'll never forget the point. Gomez was horrified to learn that a company, I think it was Consolidated Fuzz, had jumped some enormous amount. "What's wrong?" asked his wife, Morticia. Gomez replied, "I don't own any." Gomez was a silly character, and his investment behavior fit his personality. Look, there are missed opportunities everywhere, every day. You could have made a lot of money betting on the New York Jets against the Baltimore Colts in Super Bowl III, or on the Ohio State Buckeyes against the Miami Hurricanes in college football's national championship game in January 2003. Tomorrow, the stock market will either go up or else it'll go down. Either way, there's money to be made. And unless you have all of your money in the market and make all of the right trades, then you can always have done better. Is that a silly way to think? Absolutely. That's the point. Never worry about the one that got away. I've structured this course around general principles that will still be true in 10, 20, or 50 years. The technology of trading and other details may change, but the major principles underpinning this course will continue to hold. There is no free lunch. If it looks too good to be true, then it probably is. A lot of what you know from other markets, like groceries and car dealerships, is true for stock markets too. You face a trade-off between risk and expected return. It's next to impossible for people like us to pick winners and losers so that we beat the market. Diversification will always be important. 3 things will continue to determine how much you have at the end of your investment: how much you invest, your rate of return, and how long you invest. Minimizing taxes and transactions costs are the easiest way to increase your rate of return. These principles will keep you grounded as you decide whether or not to buy stocks. If you do decide to invest, then do it with confidence. Millions of successful investors once knew a lot less than you do now. What you've learned in this course will allow you to keep learning so you can make better choices. You can do this.